Just went on Tuesday, January 17, 2017 for MarketChess.com. It is MarketChess.com. Save it. Bookmark it. Pass it along. S&P 500 index daily time frame. At first blush, when you just look at this S&P daily chart, really looks like kind of a benign sell-off today. Maybe a little bit of a slight dip in the market. I mean, longer term still in this bull trend. And even when we look at the QQQ ETF for the top 100 stocks and the NASDAQ composite, kind of a ho-hum day. And that's pretty much true for the senior or larger indices. However, when you dig a little bit below the surface, the high beta, small market capitalization counterparts in the Russell 2000 index, here's the IWM ETF for the Russell, a little more concerning, down 1.33%, I should say, and in various parts since 2017 began. I know it's a young year, of course, but small caps have been showing some signs of relative weakness. And so today was the case again. If we do see some follow through lower, again, it's not the end of the world per se. Longer term still have these rising longer term moving averages on the major indices. So to be sure, bears have a lot of work to do to reverse this thing, but short term, little concerning. See the small caps and, of course, the big banks. What a head fake that this could be. Friday, after a big slew of earnings, and then the big move lower, and then actual follow through today. So, if nothing else, again, we don't want to call a top just for the sake of doing so. Calling tops are often can be uniquely arduous task in a bull run. And as you can see, there's a lot of work to do to reverse the rally since the election for financials in the XLF ETF. But short term, I think we can agree, it looks like a little bit of a change in character. Goldman Sachs earnings tomorrow morning. They got dinged today. Wells Fargo and JP Morgan. That's a heck of a gap down. And then Bank of America, for good measure, down more than 4%. So, look, there's this idea out there. Maybe they'll sell the news, sell the inauguration of Donald Trump because they bought the election, bought the rumor after the initial overnight selling that election night. Seems like an eternity ago. That remains to be seen, but what we can do is interpret the price action as objectively as we can. And we do have some warning signs. I mean, after hours, NBIX, which was already a rough healthcare chart, getting obliterated, down 10%. Qualcomm, a name which we're short inside MarketChess subscription services, got rejected at a declining 50-day moving averages, so benefited from that news today with a U.S. and an antitrust suit. So again, if chips start to come in here, NVIDIA, they've been so strong for so long, have to think that'll start to affect the NASDAQ as well. So we'll leave it there. Big slew of earnings coming up. Of course, this week and the next couple of weeks will be the heart of earnings season. There's no better way to prepare for it than with MarketChess subscription services. So if you like what you hear in my videos and see my blog posts, I'd encourage you to sign up for a membership tonight at a very reasonable price. You will get the full videos jam-packed with actionable trade ideas, educational content, commodities, fixed income, and currencies. I will keep you prepared, focused, and disciplined through all types of markets with your membership. Thank you for watching, and have a great evening.